Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into. What if you could see the market through the eyes of the big institutions? Pinpoint the exact zone where they're planning their next massive move. Well, today we are breaking down the golden pocket, a killer 4-step strategy that the smart money uses to get in at the perfect moment. Let's dive right in. Okay, so picture this. A price starts to drop. What's the first instinct for most traders? Panic, right? They see red on the screen, they hit the sell button, and they walk right into a trap. But the smart money? They see something completely different. They don't see a trap, they see a treasure chest. They're just waiting patiently for the price to fall into a very specific zone where they can scoop it up at a huge discount. And that special zone, that's what we call the golden pocket. Now, this is a very precise area on the chart that's mapped out using Fibonacci levels. All we care about is that sweet spot between the 50% and the 61.8% levels. This is where the big institutions love to reload their buy orders, and that buying pressure can create this incredible springboard for a price reversal. So what's the big secret here? Why is this zone so important? Well, it really just comes down to the idea of fair value. Think about it like this. After a huge run-up in price, the market needs to take a breather, right? It needs to find a natural balance point. The big institutions, they look at this pullback zone as a massive sale, a point where an asset just becomes too cheap to pass up. So they start buying, and that's the fuel that kicks off the next big move up. All right, theory is great, but let's get practical. Let's talk about how to actually find and chart this opportunity. These next 2 steps, they're the absolute foundation of this whole strategy. You really can't skip them, so pay close attention, because this is where it all starts. So here it is, the entire 4-step blueprint. It's actually a really simple process. First, we identify a strong impulse move. Second, we draw our fib tool. Third, and this one's key, we wait for the signal. And finally, we execute the trade. Let's break down each one of these step by step. Okay, step 1. You have to find a strong impulse move. Now think of this as your number 1 most important filter. If the market is just kind of drifting sideways, in that choppy, directionless mess, this strategy is completely off the table. You absolutely need a powerful, clean, directional move to even begin. So what does a strong move actually look like? Well, let's use Bank Nifty as an example. For that, we're looking for a rally of at least 500 points. A move that big tells us that serious buyers are in control, and that gives us the green light to start looking for our chance to join them on a pullback. Once you've got that impulse move locked in, it's time for step 2, drawing the Fibonacci tool. And honestly, it couldn't be simpler. You just click on the absolute bottom of that move, the swing low, and you drag your cursor all the way to the absolute top of the move, the swing high. That's it. Don't overthink it. Don't try to get fancy. Low to high. Done. And that brings us to the real heart of the strategy, finding our signal. This is where patience and precision are everything. We are now entering what I call the kill zone. And inside this zone, your one and only job is to wait for that perfect moment to pull the trigger. And here we are. This area, right between the 50% and the 61.8% levels, this is your kill zone. This is where all of your focus needs to be. The top edge of this zone is the 0.5 or 50% retracement level. When the price hits this line, it means it's given back exactly half of that big initial move up. And the bottom edge is the 0.618 level, or 61.8%, which you might also know as the golden ratio. The space between these 2 key numbers is our golden pocket. It's our high probability zone for a reversal. But listen up, because this is probably the most crucial rule of the entire strategy. Just because the price enters the zone, you do not automatically click the buy button. That is a classic rookie mistake that'll get you killed. We have to wait for confirmation that buyers are actually showing up and defending this area. So what does that confirmation look like? Simple. You're waiting for a very specific type of candle to form right inside that golden pocket. You're looking for a clear rejection candle, something like a hammer, a pin mar, or maybe a big bullish engulfing candle. That's your signal. That tells you the buyers are here and they're fighting back. Okay, so you got your confirmation signal. Now it's go time. It's time to execute. This final phase is all about discipline. It's about following a strict mechanical set of rules for your entry, your stop loss, and your profit targets. No guesswork, no emotion. Here is the exact plan. Your entry,
It's on the close of that green confirmation candle. Your stop loss, that goes just below the 0.786 Fibonacci level, no exceptions. For profits, your first target is the recent swing high. And if you get a really strong move, your home run target is all the way up at the 1.618 extension level.
Now, out of all those rules, there is one that stands head and shoulders above the rest. This single most important rule of this entire strategy is where you put your stop loss. This is your shield. This is what protects your capital and keeps you in this game for the long run. Your stop loss must go below the 0.786 level. So why there specifically? It's because if the price breaks down below that point, the whole bullish setup is busted. The trend is probably dead. You just accept the small, managed loss, and you move on to find the next opportunity. It's that simple. All right, let's put it all together one last time. We're going to do a quick summary of the entire four-step blueprint, just to make sure it really sticks. Think of this as your personal checklist for every single golden pocket trade you take.
Step 1, identify that strong impulse move. Step 2, draw your fib tool from the low to the high. Step 3, wait patiently, let the price come to you in the golden pocket and give you that confirmation candle. And finally, step 4, execute with a rock-solid stop loss and clear profit targets. It's simple, it's disciplined, and it's incredibly effective.
And that's it. That is the complete blueprint for the golden pocket strategy. Look, it's a method that definitely requires patience and discipline, but the reward is that it aligns your trades directly with the big institutional players. So, the only question left is, you have the blueprint, are you ready to trade like the smart money?
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.